Congress is proposing 2 laws that prevent certain groups of people from buying a house, and that could affect you. Let's find out what those laws are. So, the first proposal is the bill to ban hedge funds home buying. And basically what they're trying to say here is that homes are owned by people, not by investors. And they start off by saying for years, people have dealt with the lack of for sale properties on the market. And the scarcity drives up competition and prices, often leaving droves of would-be home buyers with few options and likely fewer affordable ones. And I'm sure a lot of you can relate to that sentence because I keep seeing over and over in the comment section that a lot of you have been trying to buy, but either it's too expensive or maybe you had the money originally, but then you got outbid by someone else who had more money. And so the bill was introduced by Congress and could soon help out borrowers. And the proposed End Hedge Funds Fund Control of Americans Home Act will stop institutional investors from buying single-family properties and force them to empty their residential real estate portfolios over a 10-year stretch. And here's what you need to know. So what is the End Hedge Fund Control of Americans Home Act? Well, this proposal was introduced in 2023 by Senator Jeff Merkley and Representative Adam Smith. And the End Hedge Fund Control of American Homes Act is a bicameral bill aiming to increase the amount of for sale supply in the housing market, okay? And what they're saying is that hedge funds and other institutional investors stand as major detriment for home buyers as they use their huge capital reserves to scoop up available properties. And this reduces the already slim inventory in the marketplace, creating a more acute affordability crunch. And additionally, their abilities to outbid normal borrowers and offer an all-cash make house hunting even more difficult. Once again, I have read this over and over in our comment section in the channel. People getting outbid by cash buyers. And when I say outbid, I mean outbid by a lot more money. And that, in essence, ends up driving the prices of the properties further up and making it more unaffordable and more expensive. Because these corporate entities have a goal of generating high profits for their investors, they inflate the housing prices, increasing the cost of living for their occupants and potentially for local properties through comp assessments and appraisals. Just to provide additional context here, the way comps are determined, it's by houses in the vicinity that have the same layout, the same square footage. So let's say, for example, if a similar home next door is worth $200,000, right? And I'm just throwing a number out there. And then an institutional investor comes in and buys the property and offers $250,000. Then the next time a house within that vicinity that has the same layout, the same characteristics, when they put it out in the market for sale, they're going to leverage the $200,000 from the original home and the $250,000 that the institutional investor bought. And they leverage both prices to come up with the new pricing for the house that just entered the market for sale. And that's what they meant by they inflate the prices, and they end up driving the prices up because it's all about the comps. The prices of the properties for sale are determined by the comparables in the neighborhood. That's why they're called the comps. Now, back to the article. As currently written, the bill has a two-pronged approach. First, it will ban hedge funds from buying single-family homes going forward. Second, those hedge funds will have to sell at least 10% of their homes in their portfolios every year over a 10-year period. And then at the end of those 10 years, the portfolios must be empty. So the analogy here is that if these hedge funds are selling 10% of their portfolio every year for the next 10 years, that means that each year, home buyers will have an extra 10% of housing inventory available in the market, or at least that's the analogy. Do you think that's exactly how it's going to work out? Or do you think there's probably something hidden or something that no one is anticipating up to this point? Let me know your thoughts down in the comments. Back to the article. Institutional investors such as hedge funds, private equity firms, and endowments own an estimated 574,000 properties as of June 2022, according to the Urban Institute. For reference, Realtor.com data revealed a total of 754,846 active property listings in November 2023. So if this proposed law gets approved, that will inject over 500,000 single-family homes back into circulation, and that will be a major boom for house hunters. What do you think? Do you think it will really be a major boom? Or do you think that having that much housing back into the economy will, in fact, maybe drive the prices down even more? And if that happens, that could also affect the value of your existing homes. But once again, this is just a proposal. It has not been signed into a law. This is nothing new since it's been talked about since December 2023. But I wanted to make an episode because I continue to see comments over and over asking about this. And normally what we like to do is to wait for something to get signed into law and then share our thoughts on it. But given that you guys have been inquiring a lot about it, we decided to create an episode to kind of like keep you in the loop and also to let you know that we're also keeping an eye on it. And as soon as we find out more, we will definitely share more information with you. Now, this was one proposal. Let's move on to the second proposal. And the second proposal, it's called the American Neighborhood Protection Act. And in essence, this was actually proposed by Democratic reps Jeff Jackson and Alma Adams of North Carolina. And what they're saying is that this act will require corporate owners of more than 75 single-family homes to pay an annual fee of $10,000 per home into a housing trust fund to be used as a pay-down assistance for families. So this definitely sounds very promising. Having an additional $10,000 in a trust fund could be definitely very helpful for families who need that down payment assistance. So let me know what your thoughts are. I'm actually very curious to know what you're all thinking about this. Now, these two proposals are quite controversial amongst people or celebrities like Kevin O'Leary. I'm sure you all know who he is, the famous Shark Tank. And his opinion about this is that legislation should stay out of the markets. Kevin O'Leary urges the government to not get involved in housing because he says the new bill that will ban hedge funds from buying homes is very, very bad and destructive. He believes that the markets should be left alone and let the markets be the markets. Leave the government to handle what they know best, which is to deal with government stuff, so to speak, and let the markets be handled by the experts, the ones who actually know how to make money. That's one expert's opinion. I've also heard other experts saying that the proposal is quite a joke because if you come to think about it, politicians, whenever they're running their campaign, they need funds, they need donations, they call it lobbying, right? And a lot of the Wall Street firms do put their money into those campaigns. And ultimately, let's say if the law does get approved, there might be a chance that there is a loophole that is also created to create that exception to the rule and allow hedge funds to continue to buy housing. That's just one of the many opinions that I've overheard. I'm definitely interested in learning about your opinion, and I can't wait to read them down in the comments.